Hello, this is Jordan. This video is being recorded on the evening of Sunday, May 21st, 2023. Thank you so much for joining me. In this video, I am going to discuss the weekly outlook for gold and silver and the gold and silver stocks as well. So getting into it, kind of a big picture macro viewpoint, what we've seen, at least over the last week, and we'll need another week or two of confirmation, but what we've seen and what we could see more of is you have this fledgling breakout in the stock market in the S&P 500, assuming it can move above 4,200, that would be confirmed. We know that the positioning has been has been really low with respect to how much capital is invested in the stock market. The masses, in a sense, have been anticipating a recession, a downturn, and so they have not been investing that much or buying that much as far as the stock market. And so the stock market, assuming the S&P moves above 4,200, that's not only is that bullish technically, but if you're looking at the sentiment and the positioning, that's going to suck in more buyers in the short term. Even if we have this looming recession coming, whether it's in Q4 or Q3, which is what the yield curves say. And so if that happens, and bond yields have also rebounded. So you have a stronger stock market. That probably means higher bond yields. And it also means Fed rate cuts are pushed out. So that's short-term bearish for precious metals. And so precious metals weakness, at least if this continues and the stock market moves higher, I think that's attributable to strength in the stock market and not, oh my God, we're going to have this nasty recession. It's a repeat of 2008, sell everything. Maybe that'll come at some point, but if going into the recession, precious metals sell off, but we see the stock market moving up, I really like that scenario. That tells us the recession in an immediate sense will be bullish for precious metals. The other scenario where if precious metals kept running higher ahead of the recession, stock market moves higher as well, then they're going to get hit with the recession. So those are some macro thoughts here. But looking at the technicals, so gold, it fell below 1980, which was the first support level, rebounded on Friday. So you do have some support around 1950. So, gold basically has bounced from that level or a few bucks above it. The 100-day moving average is now close to 1950. So we'll see if that potentially holds on another test. I've talked about early in bull markets, you have the 50-day, 100-day, 150-day as the support indicators or moving averages that you need to follow. And so at this point, given the technical damage, I'm looking at the 150-day, which is at 1868. That will hit 1900 in June. And so backing out, the key support levels for gold are 1900. And if you're looking at the 200-day, the 40-month, the 20-month, all those moving averages are 1830, kind of in that area. Probably will hit 1840, hit 1850 in the next month or two. So, assuming we have a correction for a few months here, those are the levels I'm looking at, 1900, then the mid-1800s. You have an open gap down to about 1867. So those are the levels I'm looking at, kind of medium term, very short term. Perhaps we could have another day or two of a rebound here in gold and silver. But the short-term trend is down now. So, gold, again, there's resistance at 1980. There's also resistance in the low 2000s. Silver is really interesting because, if we see, obviously, we have bond yields moving higher, and if the dollar also gains a foothold here and it gains traction here in the short term, and it can rally with bond yields in the stock market, in that scenario, you will see silver underperform gold. Now, if in this scenario the dollar doesn't rally that much, fades, then silver might hold up okay against gold. So that's something to consider. But silver broke. It closed down at 24. It rebounded on Friday like gold did. 24.50, you can see that level. That was previous support. So silver broke below that. Now that's resistance. Maybe silver can test 24.50 or 25. Those are the immediate resistance levels. I think that at some point we'll see silver come down to 22 and test the 200-day there, which is really close. It's obviously pennies away from 22. And then if you're looking at longer-term charts, 22 is a key level for silver. So that's the look at gold and silver. As for the miners, GDX fell below the initial support right around 33, closed at 32.16. If we're looking at laterally, there's lateral support right around 30 of the 200-day, or excuse me, that's the 400-day. That's an error on the chart. The 200-day for GDX comes in at 28.50. I just had to pause the video and take a look at that. But nevertheless, the 400-day is important. But that 200-day at 28.50, that's going to be rising. So look for support for GDX at 30. Then you also have a potential gap fill around 28. That's something to keep an eye on. As for GDXJ, you can see the 200-day is right there at 35 when we're looking at lateral support. 35 is a key level. So you like to see that confluence, multiple things pointing to one level. So GDXJ 38.30, support at 35. So that's about, 9% or so down to that potential support. If GDX were to come down to 28, that's more than 10%. So in that scenario, the GDXJ, that open gap, that comes in below 34. So, call it 33. So you have 33 and 35 as the target. SILJ, that's already lost the 200-day moving average, closed at 10.10, which is an area of support. So perhaps it could mount a little bit more of a rally, but it's looking like that's going to come down to the February low and the March low, that double bottom there, just under 950. So that's where we are in the very short term. Precious metals are correcting. Might get a bounce, or I should say the bounce on Friday. Maybe you get another two of gains out of that. But it looks to me like the trend over the next couple weeks will continue to be to the downside, and we'll keep an eye on the economic data, economic news, and all those sorts of things. Stay tuned for some macro videos coming this week. Thank you so much for tuning in, and I'll talk to you guys again in another video.